So everybody is watching Nvidia right now. Earnings are coming out tomorrow afternoon, Wednesday, after the session closes. And you want to know, is it time to buy Nvidia? Are we still holding Nvidia? What should we be looking to do? And how can we take advantage of this potential catalyst coming up on Nvidia? Because I guarantee you it's going to hit more than just Nvidia, regardless of whether or not the market likes it or it doesn't like it. My name is Hamilton. I'm here at the Trading Initiative. In today's kind of mini video here I want to put out over the next 5 minutes, we're going to talk about the two different NVIDIA scenarios that I see playing out and potentially what you can do to take advantage of it, including what we are doing to take advantage of it. You can either take advantage of it the way that we are, or you can play it a completely different way. It's completely up to you, but let's keep things objective. First things first, I think it's important to understand we have no bias either way which direction NVIDIA is going to respond after earnings. Now, NVIDIA is the darling child of Wall Street right now. Everybody and their grandmother is watching Nvidia. They own Nvidia. This was Stanley Druckenmiller's largest holding by a very large amount up until he recently closed a majority of the position. Still has shares, but he closed off a majority of it. I think he still has a lot of calls as well, so some of that leveraged financial derivative exposure to the upside in Nvidia. He has rolled out some of his profits, or a lot of his profits, into a lot of different positions here, but he still has a sizable amount in Nvidia. Just want to throw that out there. Stanley Druckenmiller kind of spearheading this Nvidia rally over the last year and a half, 2 years, but let's keep things objective here. There's no bias, up or down, which way Nvidia moves. Now, I want to point out that this earnings season has been particularly rocky. We've seen names like Meta, which have reported really well and then gapped down nearly 20% at its lowest before opening back up slightly, but still working on filling the gap here. Meta gapped down, and then we have names like Google, which gapped up off of earnings and then is pushing into all-time highs here. It's really been rocky. Those two Mag 7 stocks in particular kind of giving us a good picture of what earnings season has been like. Some of the larger stocks have sold off on great earnings. Some of the shittier stocks have been bought up off of bad earnings. There's really no consistency whatsoever. So now Nvidia is realistically the last really big stock that is going to be reporting in this earnings cycle. So which way does it go? I think it's better to approach this issue without having a bias. Listen, Nvidia could absolutely kill earnings and the market could crush it. Likewise, it could, absolutely have abysmal earnings, or I doubt that it's going to have abysmal earnings, but it could absolutely miss earnings and moon. It really doesn't matter why it moves. It matters how and the way it moves from a technical standpoint. So if we want to draw some sort of horizontal level here and say, listen, above this 950 area is all-time highs, I think that if Nvidia gets up and over the 950 area and the market responds well, notice that I said the market responds well. It has nothing to do with what earnings actually say. From a technical standpoint, we don't care what the earnings say. We care about the way that the market responds to the earnings. And so I think if we get up and over this 950 area and Nvidia responds well, the market responds well to Nvidia's earnings, I think we use 950 as the next level to base our risk on type of mentality, because right now Nvidia is still breaking out into potential all-time highs. This is the most important stock arguably in the market right now, but absolutely in the semiconductor space. We get up and over this 950 pivot, and I think we see minimum 1100, 1150, 1200, something like that. It absolutely could happen. I think the expected move here is up near 1000, like 980 or something like that. I think it's pricing in a 5 to 7% move, at least last time I looked. We'll see if that's continuing to be the same tomorrow before earnings actually come out. But I'm thinking 950 up and over. There's a launch pad up towards 11, maybe 1100, something like this. Somewhere up here really makes sense to me. A 10 to 15% move, not necessarily the next day after earnings, but over the next, 2 to 3 weeks. If earnings go well, I think that there's absolutely an opportunity to add 10 to 15% to the upside. Now, if earnings go bad, I absolutely think that we could drop down the equivalent amount, 10 to 15%. We're going to go down to the extreme, and we'll say around 800 as a potential little floor here. I really wouldn't be worried in either direction unless Nvidia starts to break down below its previous little low on that April 19th capitulation zone. And I think this is an important aspect. If we start creating lower lows, that is when Nvidia might be, at least in the short to intermediate term, at risk. There's a lot of money flowing around in Nvidia right now. It is a multi-trillion-dollar company. As of right now, the market cap is $2.37 trillion. And so if Nvidia does start falling down, that's a significant amount of money that's leaving the space, and that's going to impact the broader semiconductor market, the broader tech sector, and also the major indexes. The market itself will probably feel the shockwaves if Nvidia gets sold off. I would not necessarily be worried unless we start sticking new lows prior, I would say probably sub 750, something like that. even if Nvidia does get sold off. I'm not saying to go out and buy the dip immediately, but I'm saying I wouldn't really run for the hills. Now, on the other side, if we gap up we start pushing 10 to 15% to the upside, it's going to have the exact same effect across the entire semiconductor industry group, the tech sector, the indexes in general. It's going to pull everything up and continue to push things up into the all-time high space. Now, once again, Nvidia is up near all-time highs, and so is the semiconductor space itself after coming down and finding support at that 205 level. Semiconductors have rallied back up and are placing new all-time high prints. So prior to the Nvidia earning, and by the way, this is not just Nvidia that's working well, and I'm going to show you right now how you can find different semiconductors that are working well and how maybe you can take advantage of them into the Nvidia ER without you having to actually go out and risk capital into new Nvidia positions, because as of right now, Nvidia is a very, very expensive trade. Once again, draw some sort of horizontal level here at semiconductors. I would assume that if Nvidia causes semiconductors to pop, the entire industry group is going to run. So let me show you a neat little trick here. All right, so we're going to use a program called KoiFin. I use it all the time inside of TTI. If you're inside of the community, you've seen this time and time again. We're going to come into the security analysis portion. We're going to type in SMH. SMH is the Van Eck Semiconductor ETF as an industry group, right? But what we can do is we can actually dive into the holdings. And what I want to do here, we're going to go year-to-date performances, and we're going to filter by return. And as you can see here, this is going to be your year-to-date performance, and everybody's used a scatter plot, so you understand how this stuff works. Obviously, holdings is on the x-axis, and percentage of performance is on the y-axis here. So you can see the larger positions held within the ETF are obviously going to be to the right, and you can see that the performance year-to-date is going to be the vertical, right? So how high things are. So Nvidia obviously kind of standing out here. This is the king of the semiconductor space. We all know that, at least in particular to this ETF. But there are other names that are also performing very, very well that you might be able to grab exposure to, and I'm going to show you a couple that we have exposure to into Nvidia's earnings that might not cost you an arm and a leg, because right now, if you want to trade Nvidia, it's going to cost you thousands of dollars for a single contract, and if earnings dump Nvidia, if the market decides to dump Nvidia, that's going to be essentially a big loss. It's a gambling, opening up new positions through earnings reports without any sort of rhyme or reason of owning it other than, I think Nvidia is going to do good, so the market's going to go up. That's not how this stuff works, guys, at least not in the short term. JP Morgan had a double beat, one of the best ERs it's had in quarters, and it gapped down 8%, and now it's right back up to all-time highs. But that's an incredibly difficult trade to hold through if you're not in it prior to earnings, right? So once again, here's a good group of stocks that have performed very well this year. And once again, you can see down here, based off of returns, you have MU, TSM, QCOM, AMAT, Marvell, NXPI, AMD down here. AMD actually performing one of the worst on the year to date, which is funny because everybody is talking about AMD as like kind of Nvidia is 1A, AMD is 1B. I would not put those two anywhere near the same category of performance, but let's look through a couple of these as of right now. If we pull back onto TradingView, I want you to notice that if we go back to Nvidia here, we talked about this 950 all-time high potential breakout spot. If Nvidia gaps up, it's going to bring everything up with it. How is there an opportunity to grab a position prior to Nvidia's earnings that will allow you to profit if it does gap up without the huge amount of monetary risk of owning Nvidia? How can you do that? Well, you can go find some cheaper plays. We can use TSM, for example. There's a high correlation between TSM and Nvidia. Now, we have entered. You can see our entry and our addition here at TSM. This is a free trade for us going through Nvidia's earnings, meaning we've already sold half of the position at over 100% profit. So now we're able to hold TSM through Nvidia's earnings. If Nvidia, for whatever reason, the market hates the earnings and it gaps it down, we're not going to lose any account capital if those contracts don't play out in the long run. But if Nvidia does gap up, we've just hit a potential grand slam with no risk running through the ER event. That's kind of what our goal has been over the last few weeks. We've talked about it in the daily market updates, but now I'm showing you how we were able to go and find these. So TSM, we risked the previous 138, the all-time high breakout. We got the initial push. We were able to turn these free, but this is like a 1/5 of the cost of Nvidia. If you're paying thousands of dollars per contract on Nvidia, you're paying hundreds on TSM. Another one is MU, which we have exposure, and you can see that we originally entered it way back here on the all-time high breakout, and then we re-entered here as it continued to push back up. And this is an all-time high move in MU as well. Once again, this is a couple $100 per contract, maybe $1,000 at this point, but significantly less than Nvidia. You can see the recent move in QCOM here up into an all-time high. You can see we just entered it just a few sessions ago, like a week and a half ago. This is a free trade. I'm going to show you guys in a second what it looks like, the trades themselves on Discord, so you can see what we're working with coming into the Nvidia ER. But this is giving us direct, I shouldn't say direct, it's indirect exposure to Nvidia's earnings, but the correlations are so incredibly high that these types of opportunities are giving us an opportunity to hold semiconductor exposure, either completely risk-free or most of the risk taken out of the trade prior to Nvidia's earnings. And hopefully this is getting your guys' wheels spinning inside of your head here that you don't need to go and actually own NVIDIA. As a matter of fact, we can get really into the nitty gritty here, and we opened up this mid-cap stage 2 breakout semiconductor name that's up into 52-week highs. Looks like 2-year highs here in SMTC. This is a fantastic little shares trade and an options trade. Opportunity here to hold this thing in from entry already. It's up nearly 17%. Our contracts are just about to flip free here. I think those contracts up about 80% right now. They're moving a little bit slower than some of the large cap and the large cap semiconductor stocks. But if I come back into Discord really quick, once again, all I'm doing here is showing you guys that we're holding semiconductors, and we've been able to flip a bunch of these things free into the NVIDIA earnings. Let's see if there's anything here that we can talk about in terms of semiconductors. There's nothing there in semiconductors. Let's see a bunch of this stuff here. Semiconductors, we have a QCOM here at 129. This was a few sessions ago, so this thing's up a little bit more. Where they posted on the trading floor instead of a couple more QCOMs. TSM, you can see TSM. This was about a week ago. This thing was already up 100%. So this thing is continuing to push here. And you can see, obviously, you can see some of the positions that we've taken over the last 2 to 3 weeks here are up a lot right now. Remember, guys, we've been buying over the last 3 weeks, but you can see kind of the thought process here. TSM, we were able to open this stuff up a long time ago and just sit here and wait for the play to work itself out. We're not trying to predict which direction NVIDIA is moving. We're trying to get advantage. We're trying to take advantage of a potential pop-up in NVIDIA's earnings, and we're doing that by taking an indirect position through the industry group itself, through different types of semiconductor plays that have a high correlation to NVIDIA's earnings, right? So if you flip back to TradingView one more time, don't go into NVIDIA's earnings with a bias. We really don't know which way the market is going to ramp this thing. I would be completely prepared for either direction and be okay with whatever positions you have on the books. If you can remove risk, and I don't mean close out your entire position, but de-risk a little bit into the ER, I think it's just going to be easier to hold through. If you get the gap up, congrats, you have a huge win on your books. And if you get the gap down, you're not going to be hurt as much or at all if you're able to turn these things free. And once again, I wouldn't necessarily be worried about NVIDIA if it does gap down, unless we start breaking into new lower lows, which I don't think we're going to sell off 20-25% off of a market that doesn't like NVIDIA's earnings. That's so much cash that it might steal the record from Meta, which happened just a few weeks ago. But that's kind of the way that we're playing NVIDIA, right? We have exposure through different types of semiconductor plays. Most of them are free right now. We expect NVIDIA to eventually catch on and continue its primary uptrend. This is a bull market, guys. It's a bull market. This is the flagship stock. It's crowded. It's messy. It's expensive. That's why we preferred to play other things around it instead of NVIDIA. Guys, my name is Hamilton. I'm here with the Trading Initiative. This is Wall Street's #1 stock. Everybody owns this thing. Is it time to own it? Is it time to sit back? What do you think about earnings? Let me know. I'll catch you in the next video.